be providing you with an insight into Morgan Stanley, celebrating our 90 years and shedding light on our rich history as a firm.
Great. Thank you so much, Linda, for that kind introduction. I'm Andrew Sheets. I'm a managing director at Morgan Stanley. I've been with the firm for a little over 21 years. I joined out of university. I went to college in the US. I studied math and economics there, and I joined into the firm's summer intern program, summer analyst program. I thought that I was interested in finance. I liked the idea of current events. I liked the idea of doing something kind of that was intellectually challenging and constantly changing, and where I could use an interest in math and economics. But I was also, even as somebody who I thought was pretty aware of markets at, the university level, really confused about how kind of big an organization like a Morgan Stanley was, how different the various banks are from each other, how different the divisions within the banks are from each other. And, maybe if there's one thing I hope you can get out of this session, if there's one thing I can hope you get out of this series, it is just a better understanding of that. It's not unusual to be a little bit confused or a little bit overwhelmed by the scale of these organizations, the various different types of roles, the difference between the roles. And that's really kind of part of the journey, trying to figure that out, and it can be generally tough to figure that out, especially because ourselves, and I'm sure a lot of other organizations, are all telling you that we're great and we're great places to work, and that each division is a great place to work in. So obviously all of that is true, but I think this is something where the more knowledge you can obtain, the better you can get a sense of who we are and how we operate and how these different businesses are. I think that's the goal. That's what we're hoping to achieve. In terms of my current role, just a little bit about that. I work within research. So this is the part of the firm that is trying to figure out market questions. It's trying to figure out, will the Federal Reserve in the US cut interest rates next month? And if they do, how far will they cut them over the next year? It's trying to think about, if they don't cut interest rates, as we expect, what will that mean for the currency markets? What would that mean for the interest rate markets? What's the outlook for inflation in the US, in the UK, in Japan? What's the outlook for the stock markets in these regions? How do things like tariffs, how much do they matter, or how much do they not matter? These are the types of questions that we're often asking within research. And it's a role that is a mix of very qualitative type of analysis, where you're really trying to kind of understand legislation, you're trying to understand politics in countries, and quantitative analysis, where you're trying to use statistics, other types of math to try to reach an insight, to try to reach a conclusion. And so this is a part of Morgan Stanley that's a very dear to my heart, because I've worked within research for the last 20 years. But I think as we dig into this session, I think an important thing to emphasize is this is just a very small part of a very big pie. That Morgan Stanley is a very large place, and we'd like to take you on a little bit of a journey into what it is like. So maybe if I just share my screen with you here, that is great. So what is Morgan Stanley? Who are we? How should you think about this company, this organization? Morgan Stanley, I think at a very simple level, is trying to raise, manage, and allocate capital, allocate money for our clients. And we do that through three big divisions. We have an institutional securities group. That is a group that's involved in investment banking, doing things like IPOs, taking companies public. That is the part of the firm that is trading, that is buying and selling stocks and bonds, helping our clients who need to sell stocks, need to buy bonds, need to complete more complex transactions attempting to be a facilitator of that type of activity. It is my world, research, where we're in the client service business, where we're trying to provide answers for clients. But there's also a large part of the firm that's about kind of protecting and allocating and managing money. Investment management is a very big part of the firm. This is where the company Morgan Stanley Investment Management is managing money for insurance companies, pension funds, other kind of large investors. And then there's a personal side of this. There's the wealth management side of the firm. And Morgan Stanley is the largest wealth manager in the US. That makes it probably the largest wealth manager in the world. And this is a very personal type of activity. This is, trying to grow and protect the money that people have saved over, a lifetime of work, often. And they're saving for retirement. They're saving for their children's education. They're saving for other kind of big life events. And so, these are very different roles. It's a big firm, but they're all important and they're all kind of integral to what we do. And then supporting that is, a big technology platform, a big operations platform, and a lot of other company-wide roles that kind of make all of the three things at the top really work. Now, this is also a global firm. If we think about where Morgan Stanley makes its money, makes its revenues, it is concentrated in the US, although a lot of financial markets are concentrated in the US. The US equity market, the US bond markets are just bigger. So that's a function of this. But it is a global firm, and I'd like to think we're a pretty big firm. We manage around $8 trillion of assets in total. I think that's a very big number. And we have 80,000 employees around the world. So, this is a global firm, a large firm, and really kind of a leader in both kind of managing money for clients, but also doing the types of kind of strategic transactions that allow companies to grow and progress. It's also, I think, a business that really intentionally is trying to be balanced. Roughly half of the firm is managing money, and roughly half of the firm is that institutional side of trading, of investment banking, of helping companies issue debt, issue equity, kind of raise money for their operations. And I think this will matter, and I'll come back to this when we talk a little bit about the history, but I think this is very important to how the firm sees its success, is that the wealth management side is more stable. The institutional security side is more volatile, but can be fast growing. And I think it's really a real important intentional decision that the firm can be stronger by having these two things together, by having both some kind of ballast and stability from the wealth management side and kind of speed and power from the institutional security side. So, both of these are kind of very, very important to how we think about kind of our longer term success. With that, I'll pause, and I think we'll play a short video to talk more about the history.
Morgan Stanley, the prestigious 50-year-old investment banking firm, will go public tomorrow morning.
Great. So, what you saw there was, well, a video version in a very short way of kind of 90 years of Morgan Stanley. And maybe just to give a little bit of narration to what you saw and a little bit of history that I think is important. The history of this firm was that in the Great Depression in 19, late 1920s, the crash of 1929, the 1930s, the Great Depression that followed, a driver of that was that banks were both taking in customer deposits, but also trading and using that kind of customer money to help back trading operations in a way that made the system very unstable and kind of very dangerous for people who just thought they were putting their money in a relatively boring bank. They didn't think the banks were trading with that. And so there was an act called the Glass-Steagall Act. You saw President Roosevelt signing that act in the 1930s that said that banks need to split out their trading and investment banking operations from that more kind of mom and pop, managing bank accounts. And so Morgan Stanley effectively lifted out the trading, the banking operations of J.P. Morgan at the time, and created a new firm back in 1935. Since then, the firm has really gone through a significant transformation. It was early in its embrace of technology. I'll come back to that, but that remains very important to how the firm sees itself. It was early in embracing international growth. We opened our Paris office all the way back in 1967. We opened our Tokyo office in 1970. And it was also, I think, kind of relatively early in embracing this idea that we did not want to be a traditional bank per se, with bank branches, but that there was real value in doing both, helping clients raise money. You saw that Morgan Stanley helped Apple go public for the first time. It helped Google go public. And again, maybe you've covered this in other sessions, but those are important transactions because if a company, when companies need to raise money, when they want to, expand operations, expand production, hire more people, build more things, you can either borrow that money or you can sell part of your company to do it. And, in many cases, Morgan Stanley is there for both types of transactions, but, companies go public because they don't want to take on debt. And they feel pretty confident in their business. They feel confident about selling kind of a portion of themselves to kind of fund that future expansion. And so, that's a very big part of what Morgan Stanley was doing. But I think it also realized if the firm is also kind of managing money for individual clients, this wealth management side of the business, then there's a natural connection there that can help us, more easily raise money for companies. That gives us a natural connection to hundreds of thousands of potential investors who might want to invest in Apple, who might want to invest in Google when it goes public. It was also, and I'll touch on this a little bit more. In 2008, 2007, 2008, 2009, the firm went through a real crisis. It went through the global financial crisis. I was there for that, and that was a real tough time for the firm. It was a real, the firm came very close to really, ceasing to exist as it currently is. And I think that's something that really caused the culture of the firm to really kind of recommit that sort of thing, it will not happen again. That the firm, going forward will be significantly better capitalized, will be much more kind of conservative with a small c in how it manages itself and how it thinks about its capitalization and its risk taking, and not to do that in a way that prevents it from doing things and taking risk and growing, but doing that in a more balanced, responsible way. And so, in 2009, the firm expanded in the wealth management side. We took over effectively the wealth management business of Citigroup, an organization called Smith Barney, again, kind of committing to being more balanced, to being more diversified, to giving ourselves more ballast with the aim that will create a more solid, sustainable firm over the long run. And that has continued to be a strategy. The acquisitions of E-Trade, the acquisitions of Eaton Vance, these have all been designed to really broaden the footprint of the firm, make us more diversified, make us hopefully more resilient. As again, invariably there are economic cycles, invariably there are ups and downs, but doing that in a way that hopefully allows us to weather those storms. And I'd also like to think that this is a strategy that the market is rewarding. This is the market capitalization, the total value of Morgan Stanley over time, from when it went public in 1996, as you saw from the video, to today. And again, this is I think a real exciting time for the firm, because it's really been in the last 5 years where I think a lot of the hard work of the previous 15 years is, I think, really starting to be appreciated by the market. That fall again, going back to that timeline following the financial crisis, the firm, really invested in diversifying its business, really made a commitment that being more diversified was going to be more valuable, was going to help clients over time, was going to be more successful over time. But it took, I think, some time for the market to have that view. But again, I think looking ahead, this is I think a situation where the firm is in a historically strong place, at least from the perspective of how valuable does the market think Morgan Stanley is as a business, and what are the prospects going forward, and that's something that I think is kind of an exciting thing to be a part of. Now, again, talking a little bit about the strategy of the firm and how the firm sees that strategy, I actually want to focus here on point two and point three, and again, I think this relates to one of the most formative times I had at the firm, which was that period of 2007, 2008, 2009. It was, the firm was confronted by, the worst financial crisis in 80 years, 90 years, the worst banking crisis that we had seen in a very long time. And I think, this is in some ways a function of the financial business. There are always cycles. There are always unpredictable events. But it's also, I think, something that the firm has, really tried to learn from and change its strategy or impact its strategy going forward. And so if I think about, the third pillar, this idea of strong capital, of being liquid, of focusing on profitability, incredibly important things that, I think are really born out of that period, that we want to be the best capitalized of the investment banks. We want to have a level of cash on hand, of liquidity that puts, any sort of stress kind of beyond reproach, and that we want to be profitable. That's important that the firm is successful. That allows us to weather the invariable storm, challenge that of course will pop up. This is an uncertain business. Losses happen all the time. Bad things happen all the time. But if your underlying business is strong, that's very important to how you can weather that. I think it's also going to point to this idea of humility, I think is very important. That, again, the firm was really tested. The firm, at the time had been around for close to 70 years, and there was and it was under some of the most strain it had ever been. And so this idea that we really need to be kind of humble about those challenges, that we really need to work together to think about both what went wrong and how do we make sure that doesn't happen again. And, to really also have a culture that is not about any one individual, that is not about, any one trader or banker or manager being so, thinking that they are so important that they could put the broader firm in any sort of jeopardy. And so, I think something that is, and again, I will only speak to us, but this is I think this is a firm that really values humility and really values partnership. And that's for some people, and it's not for others. And I think if you see yourself as a star, if you see yourself as somebody who likes to kind of operate alone, I mean that can be great. You can be incredibly successful for that, but it actually we're probably not going to be the right fit for you, because I think this is a place where culturally, it's not about stars. It's about people being humble, people being good at their jobs, and people trying to work together to hopefully create something that's bigger than themselves. The other thing, and this goes through some of our core values. I won't go through each and every one, but these are important things to us. I would just stress, as somebody who's been here for a long time, these aren't just words. These are issues that come up when we're thinking about who we hire. These are questions that we come up when we're thinking about evaluating, and thinking about how people have done over the course of the year, how they're performing. And something that I'd also stress is that is kind of the last two on the right-hand side. The idea of having a diverse, inclusive firm is a value that we have had and that we continue to have. And this is an issue where I think the firm has been steadfast in its commitment to this. And I think that's kind of important to emphasize, as maybe you have seen more varied commitment elsewhere. But this is incredibly important, and this is about the idea again that a diverse organization is a better organization. A diverse set of thinking makes for better interactions with clients. It makes for better risk taking. It makes for better investment decisions. And this is and remains a really central part of how we see the firm and how we see our strategy and how we see our success. And then giving back is very important. This is a firm that really does pride itself in its charitable efforts, where it wants you to do your job well, but not only to do that. And if you, I think, look across the ranks of people here, that there's a really kind of a variety of ways that people give back and are encouraged to give back, and that's really cheered on in a way that I think quite heartening to see. The other thing I just kind of want to make sure I spent a little bit of time on is that this is also, I think, a business where technology is absolutely central to what we do. If we think about asset management, if we think about wealth management, if we think about trading, these are all incredibly technology heavy types of things. And it's important for the firm to have excellent technology, and it is something that the firm absolutely invests heavily in. And so the firm does not disclose a lot of information about how much it invests here for maybe obvious reasons. But to share one number, so way back in 2018, the firm was spending $4 billion a year on technology. It's I would imagine spending a lot more now. So, this is absolutely an area where we have a lot of computer programmers, we have a lot of software engineers, we have dedicated technology teams, we have technologists embedded with our trading operations, with our research operations. This is very much like, if you like technology, if you like to code, if you like to design software, if you like to work with artificial intelligence, there is absolutely an enormous of that going on at the firm. And it is something that, going back to that timeline, I think the firm way back in the 1960s was very early in using computer models to try to think about markets and process information. That remains central to how it's thinking about things today. And this is a real crucial issue, right? That we work in a competitive market, we work in a competitive industry. It is absolutely essential that we have best-in-class technology, that we have best-in-class thinking, If we don't, we won't be successful. And again, this is a highly competitive, a place where we want thoughtful, innovative, forward-looking individuals. And one exciting thing, and honestly, I mean, there are a lot of reasons why it's important for us to recruit, why we're doing sessions like this, why we want to find great, hungry, talented young people. But it can also be the case of you are often some of the most thoughtful people about technology we can hire. You have grown up in and are using technology in a way that some of us have been around for a longer time just aren't as native in. And so, again, this is something where if you think about how can I make an impact to an organization, you can absolutely make an impact to the technology side. This is something where we are absolutely looking for people who want to be at the leading edge of technology, want to try new things, can think creatively about how this rapidly evolving world of technology can help us solve problems for ourselves and problems for clients. I won't belabor the point, but I'd like to think that the firm is doing well in a few things. You heard me talk about that, but this is a short list of some of the awards that the firm has won. And again, I can only speak for myself and only speak maybe for my own journey, but one thing that has kept me at this firm for a long time, one reason I like to work here is that I think in some ways a good job is that you get to do interesting things with interesting people. And I think another important factor is that if you are somebody who has high standards for yourself, who wants to do good, interesting work, I think you want to work around other people who have high standards for themselves and who are motivated and hardworking. And that's very much, I think, who we're looking for and the culture that's here. And again, it's not for everybody, and that's okay. There's absolutely no obligation that this is the right place for you or the role for you. But if you are really interested in pushing yourself in doing really kind of high class, innovative, tough, challenging work with a bunch of people who are very bright and motivated and hungry, then this can be a really good place to be. And that's again, I think a part of both who we're looking for, but why you might be interested in looking for it. And then maybe just to talk a little bit at the end about this idea of giving back. Again, this is something that's really pretty deeply integrated in how the firm sees itself, sees its mission. Listed here are a number of charities and organizations that the firm works with. It's kind of a weekly occurrence. I'm based in the London office that somebody is doing some sort of charitable run, bike, swim, walk event, and there's a lot of support. There's a lot of community engagement around that. And so again, the firm does a lot of things. The firm's main focus is obviously on raising and managing and allocating capital, but the firm for a long time has had I think a strong commitment to trying to make sure that it takes it uses that success to support causes that make the world a better place and that are close to its heart. And these are some of the things. These are some of the things that we do. So maybe I'll kind of pause there and again just to maybe wrap up and summarize. Morgan Stanley is a firm that's been around for a long time. It's been around for 90 years, and over that time it has gone through a lot of change. It started off as a very small organization, kind of spun out from a very large organization as a result of legislation following the Great Depression, and it's really evolved into something that's different, that's much bigger, that is a $200 billion company that's managing, close to $8 trillion of client assets with 80,000 people around the world doing that. And, that sort of transformation is a real challenge. And I think one reason why, you will hear sessions like this, maybe other sessions from Morgan Stanley talk so much about culture and values, is that I think it's absolutely essential when you're going through that sort of transformation to have those set kind of anchors that keep the ship on course, because it can be very difficult. You can absolutely lose your way. And I think financial history is littered with companies that kind of forgot what they were and forgot what they were trying to do, and ventured off course and really struggled because of it. I think it's also the case where when we think about these values, and again, maybe you're watching this and you say these sound great, and maybe you're watching this and you're a little bit cynical. You say, well, of course you're saying these things. Every company says these things. But again, and I say this I can only say this from experience, that these values I think are also very essential to how we think we can succeed. The firm is for a very long time kind of had a slogan of first class business in a first class way. And, I think it's very essential for us to think about if we're going to sustain ourselves, doing good work is a good way to sustain yourself. Doing things that are unsustainable, doing things that are risky, doing things that might be very profitable in the short run or feel good in the short run, but put yourself in longer term danger, those are absolutely bad business decisions as well. And again, I think when it comes to working with clients, whether they're very large pension or insurance companies, or whether they're a couple who's just kind of saving for retirement, it takes a very long time to build that trust and a very short period of time to ruin it. And so again, I think when the firm thinks about where is it, where can it succeed? Where is their real kind of long-term strength? Again, I talked about kind of I showed the market capitalization for Morgan Stanley because I think it's important that the firm kind of stuck with this strategy even when it wasn't obviously being rewarded in the immediate term, where it wasn't about we're going to do this for the immediate benefit or the immediate bump. It's that we think this is the right strategy. We think it will pay off over the longer run. And I think that thinking still kind of permeates the organization. So we'll see. Hopefully this has given you a little bit of a better sense of who we are, our kind of our last 90 years, and hopefully many more years to come. And with that, maybe I'll pause and would love to take a few questions from the audience, Linda, if we have them.
Of course, we've had quite a few questions come through. But I guess to really start off and going back to sort of key events over the last 90 years, what would be the one of the key events within this time frame that really set Morgan Stanley apart from our industry competitors?
Yeah, so I think it was really how we responded to the financial crisis. So, one, I think that was a real transformative event. I mean, the firm really changed. We lost a lot of people over that, but also a lot of the leadership of the firm grew out of that crisis. A lot of the current leaders, and many of them were quite young when that happened, but were kind of born out of that fire, you could say, and they learned a lot from that. And maybe this is something people can relate to on the call. It's often in times of real stress or crisis that you learn the most. That you can learn more in that 6 months of crisis than you could maybe learn in 20 years of more normal times. And so I think that was very important for really imprinting in a really lasting way some of these values into people who then kind of went on to become leaders. And I think related to that, it was this embracing of a really balanced approach that the firm can be a lot more successful, can be a lot more, ironically, can be a lot more nimble by being a little bit more boring, by embracing kind of the wealth management side of the business, something that is stable and sustainable, kind of allow us to do other things, whereas previously we were much more tied to whether or not the market was going up or down. And so I think that was also like a real kind of transformative piece where it wasn't clear that was going to be successful. It wasn't clear kind of the firm had a lot of different ways to go. And I guess, I'm also picking on that because I saw it firsthand, but that to me really stands out.
Thank you, Andrew. And then I guess shifting gears and sort of looking at the future, we've had quite a few questions on that as well. So over the past 90 years, Morgan Stanley has clearly continuously innovated. What is the biggest innovation you think that will really shape the firm's future for that next 10 to 20 years?
So I think there are really kind of a few different ways that this could a few different ways this could go. I do think that this question of artificial intelligence, of AI, is really kind of a very interesting, important debate or opportunity for the firm, right? Because on one hand, managing money for somebody is a very personal thing. This is you're talking about people who have worked long hours their whole lives to put this money together, and they're an engineer or a doctor or a lawyer or a teacher, and they know that business. They know less about investing. They are trusting that they're trusting a firm to manage this money that they've really worked hard for. And so that's a very personal thing in many ways, right? People don't want to turn that over to a computer. But there also are a lot of ways where technology can give much more personalized advice, where technology can give better insights into, how are these portfolios constructed? What do people own? What investments might investors be interested in? Can you help with providing more frequent, better updates from those investors? And then there's also a lot of, a lot of transformation in the way that the firm thinks about kind of trading, where, trading is becoming incredibly technologically dominated, and, we can call it AI, you can call it algorithms, but that's also kind of really changing the size that the firm can trade, how it trades it, how competitive it is. And that's also going to be an area of constant change where the firm really has to kind of keep evolving, keep innovating. So I think the most kind of important, kind of future discussion is going to be around, making sure to get that mix right, be with both kind of using more technology on the wealth management side, but not losing the personal touch, which is often very important. And then I think on the institutional side, it's that how can we use technology to save more time on the more mundane, but also stay at the leading edge of some of these activities like trading, et cetera, where you kind of need to be the best or you're very far behind.
Absolutely. Thank you, Andrew. We have time for one more question. And I guess with there being so many opportunities at Morgan Stanley, and as you know, our audience, they're in that stage where they're either completing university within the next year or so, or they're just in the midst of their second year. What would your advice be for a student who's looking to apply to opportunities? What could they really demonstrate to show that they're really a good fit for the firm?
Sure. So I think there are a couple of things that I would emphasize here. The first is if you have experience with financial markets, great. If you don't, I would really emphasize do not let that dissuade you. Some like the person who recruited me out of college, who was incredibly successful, like painted houses over the summer. But he was very thoughtful, very commercial, very creative. And to think about, like, again, these issues of thinking about value, like, is something over or undervalued? Like, sure, there are deeply complicated financial ways to think about that, mathematical ways to think about that. I think that's also a decision we all confront every day when we're buying things or thinking about what we're going to do with our own money. And so having a commercial mind, having a mind that is looking for opportunity, sees a gap, sees something that somebody else isn't doing. Like, even if that's not in a necessarily formalized mindset, that's important. I would say if you've been a waiter at a restaurant, you have dealt with difficult people. That's something we deal with every day. These skills don't need to be, I did an internship at a particular broker and that's my only way in. What I would say is whatever experience you do have, lean into that. Be proud of it. Put that in your cover letter. Um, but also really think about what did this teach you? The second thing I would say is to really have a think about what sort of work to expose yourself to as much of kind of the financial world that you can be and be honest about what you like, what you're interested in. When I was applying out of university, I thought I wanted to do trading because it was kind of a cool sounding thing. I have absolutely the wrong personality type to do trading. I realized that very early on. It's not for me. It's for some people, not for me. So again, it's not important that, if don't worry if everybody's saying you should do investment banking and you don't really like the sound of it, or if everybody's saying you shouldn't do investment banking and you really do like the sound of it. It's completely personal. These jobs can be very different. And so trying to both, understand the different roles they are, be honest with yourself about what sounds interesting. When you read the paper, what sort of stories do you like reading about? Do you like reading about the broader economy? Do you like really digging into what's going on in a particular sector of the economy? Maybe it's in retail or software or car or the automobile sector. These are all, again, there are people at Morgan Stanley who live and breathe the auto sector and the innovation that's happening there. And there are people who live and breathe much, much bigger picture things, who live and breathe Brazil, who live and breathe Japanese monetary policy, who, live and breathe, the Swiss franc. There are just a lot of different roles, and to be honest with yourself, to be open to different things, and to be open that it's like different types of experiences can all be really valuable.
Thank you so much, Andrew. Couldn't agree more. Thank you for your time today and so sharing your insights and insights into our rich history here at Morgan Stanley. And thank you all for all of those in the audience as well, sending your questions through. Um, we look forward to starting the series again next week on Tuesday, the 26th of August, where we will be joined by two of our recruiters who will shed light on the different opportunities here at Morgan Stanley ahead of our programs going live at the start of September. Thank you all for joining us, and we look forward to seeing you again next week.